Okay, well, meantime, just a big teaser for what we have lined up for you in next week's episodes of The Money Show. From Monday to Friday, that's 5 days, The Money Show will be running a personal finance masterclass. India is going to start unlocking in an even bigger manner from the 1st of July, or rather from the 30th of June. And you as well need to start unlocking the power of personal finance management. We'll be talking about right from the earning potential that you can have in your current job or your business, because let's face it, COVID has disrupted quite a bit, to managing your investments, and also, like we always do on our Spend with TMS segment, how to extract the best value from your hard-earned money. Like I said, it's a 5-day personal finance masterclass that you must ensure you tune into, with day one being on Monday on The Money Show at 5 p.m. Okay, here's an interesting product that we thought would be something worthy of sharing with all of our viewers. A smart investment pack. Now, this pack claims to actually be 3 products in one. It can give market-linked returns. It also provides cover for your life. That's basically making it a life insurance product. And not just that, it's also tax efficient. So what exactly is this product? Who is it meant for? How much will you have to pay to buy this product? What kind of returns can you expect? And what are these tax benefits that I'm talking about? Let's unearth this product, discover a bit more with Santosh Agarwal, the Chief Business Officer for Life Insurance with PolicyBazaar.com. Santosh, thanks so much for joining us today on The Money Show. It's lovely having you back with us. I hope you, your team as well at Policy Bazaar are doing well, staying safe amidst this COVID pandemic. To start with, why don't you introduce this product? I mean, it's like a package in one. I guess that's the reason why the name is Smart Investment Pack. So yeah, what exactly is it about this product that makes that rather it serves 3 purposes with just one?
So given the global pandemic that we all are facing, and we are all grappling with the various issues, and financial issues, one large issue that we face today, we wanted to bring to consumers a product that they wouldn't need to worry about market volatility, because obviously during these times and during all pandemics that we've faced in the past, we've seen markets can be really volatile, and the normal retail consumer is not used to looking at the market daily or adjusting for when to invest, when to pull out money. So we said, why not do that for the consumer and combine different asset classes, combine a debt product, combine a equity product, and within equity bring a large cap equity along with mid cap equity, and then bring them with the best fund managers and the best fund houses. So we said, let's club that in for a consumer, and based on the consumer's age and risk appetite, offer a combination that would suit well for the customer's need, both in terms of the risk appetite and in terms of returns. So how these basically work is we've just taken low-cost ULIPs in terms of where the amount that you pay is actually the amount that gets invested. So the cost charge is minimal. We've taken these products from different companies, say an HDFC Life, a Bajaj Life, and ICICI Prudential, which offer the best returns in the market, and combine these to form one product. So for the consumer is one product, but at the back end, these are segregated, and the amounts go to different companies, and different fund managers are actually investing the money, but they're able to bring out the best return for you and at minimal risk. So that's the combination. It works in terms of risk, and it works in terms of returns, but is also tax efficient, because given it's a ULIP at the end of the day, there is an ATC rebate. So under ATC, you do not it's tax exempted, and the biggest part is 1010D, which means that at maturity, whatever is the profit that you make from this investment is entirely tax free, and that's the huge benefit. And along with this, there's a life cover. So for example, if you were to go in for an SIP of say 5,000 rupees every month, you get instantly a 6 lakh life cover. So I think in terms of a combination of a protection cover in these times, and a tax efficient product, and also a moderate, decent return product, which gives you anywhere in the range of, say, 7 to 12% kind of a return. I think it's a decent product for consumers.
Now, it does sound eerily similar to a ULIP, right? It does have a ULIP as well as a combination of insurance and equities, and gives you, some tax benefits as well in Section 80C. So how does this smart investment pack differ from a ULIP? And, by the way, ULIPs, again, it's not a product that many financial advisors that we've spoken to on the Money Show are a fan of.
No, absolutely. I think ULIPs have earned a bad name, and rightly so in the past, but that's an era that we really have left behind. That's the pre-2010 era. The ULIPs have really, really involved. And what we're talking about today are 5G ULIPs, where they are equal or to as similar to a mutual fund, because the basically the expense ratio is equal to or lower than some of the mutual funds today. And the reason why a lot of financial advisors were against, say, ULIP, because they said that don't mix protection needs along with investment needs. And that's been taken care of, because the amount that you pay for protection, or the amount that gets deducted for mortality, is actually now being returned back to the user. So you're not actually paying in a way for your life cover. So now this is a pure savings product or investment product that can be compared to any mutual fund. And hence, I think one should look at it in a similar manner. So, and the investment pack it's not different from a ULIP. It is a ULIP product. It's just that 3 different ULIPs from different asset classes. So one is a debt, one is a large cap equity, and one part is a mid cap. So these are bought together so that the returns are decent, and at the same time, your risks are minimized.
Okay, and now, Santosh, you basically said that it's like a concoction of several ULIPs, right? That's what your smart investment pack is. Does it mean that it would be a bit more expensive as well? Of course, the amount that I'll have to pay will depend on my age, health factors, etc., because it's also an insurance product. But yeah, what about the pricing of this?
It's like saying that, you were to buy 3 different products and pay, say, 5,000 rupees individually for each of these and make 3 different transactions. Instead of that, we are saying that, look, we've clubbed it, and you just need to make one transaction of 15,000 rupees. So the total cost remains the same. There is no arbitrage in terms of the cost going up or down. So whatever the cost structure was, that remains the same, and the cost structure is minimal, because you aren't paying for allocation charges, you aren't paying for any commission because this is online, you aren't really paying for any administration charges. The only charge that you're actually paying for is fund management and mortality. And like I said, the mortality charge is actually being returned to you at maturity. So basically, the only cost that you're paying is fund management. That too, it's capped at 1.35% because of the regulatory structure that ULIPs have. So in a way, 1.35% is all you pay for fund management, and then your money is being managed by the best fund managers in the country and by the best fund houses.
Okay, Santosh, if I have to just summarize it, this is a product that, in case of the market really going bad, like it did, during the coronavirus, we saw a massive crash in the markets. Our NAVs as well had cracked for various mutual funds, so on and so forth. So in case of the market going bad, a worst case scenario, what can happen to my capital in the smart investment pack? And of course, on glorious days when, the bull run is strong, what does it mean, for my smart investment?
So the smart investment pack is actually a totally market-linked product. So the returns will vary with the market. If one were to, there is an alternative to the smart investment pack, which is called a capital guarantee product, which is of a similar nature, where what we've done is we've combined a ULIP with a guaranteed fixed benefit product. What it then does is that your premium remains guaranteed. So if you start an SIP of, say, 5,000 rupees today for, say, 10 years, right? Whatever the total amount that you have paid, say, so you paid 60,000 rupees over 10 years, so you paid 6 lakhs. The 6 lakhs can never go down. So your premiums are guaranteed because the backend product has a guaranteed element to it. So your premiums remain intact, and whatever money gets invested in the market, the upside comes to you. So if you are a little wary of taking risk and you're not the mutual fund kind of a buyer, then I would say that instead of a smart investment pack, one should go with the capital guarantee product, which is again nothing but a ULIP product combined with a fixed benefit product.
All right, great. Santosh, thanks so much for joining us today and, sort of explaining this product so well to all of our viewers who may be interested to perhaps look into the product. You can always go onto policybazaar.com as well and check it out. And of course, do, pin this interview that we'll be putting up on Twitter as well, and then take a decision. All right, well, on that note, we will wrap it up on this episode of The Money Show. Like I said, don't forget, next week we have a very special series coming up, a 5-day personal finance masterclass. So bring out your pens and papers. We're sure you'll have lots of notes and takeaways from that series. But for now, it's a goodbye. Thanks for watching. Enjoy your weekend. How many times have you thought to yourself, if only I had a chance to do over, it would all be different? Well, as India unlocks, here's your opportunity to unlock the power of efficient personal finance management. The Money Show presents a 5-day personal finance masterclass. Personal finance begins with finding your money earning potential. Discover your earning potential in this post-COVID world. Learn insuring before investing, because the one thing that COVID has brought about is uncertainty. Learn the smart way to grow your money while making the most of your monthly income. Before you venture out into investing, take a moment and rebalance your existing portfolio. And earning money means nothing if you don't learn how to extract its right value. So get ready to unlock your personal finances, and for this Finance Reboot Camp from the 29th of June to the 3rd of July on The Money Show, right here on ET Now.